Hey everybody, final session of the week here. My name's Brent Moores. I'm sitting in for Mike Fairborn today. He's out today. And hey, I'm just glad you're here. You finish off the week with me. Interesting week, interesting day in the market. Let's talk about it in just a minute. Let me just mention also that Connie is in the chat. Appreciate Connie, of course. I've been working with Connie for over 2 decades now. So she's awesome. I've learned a lot from Connie over the years. And you can follow us on X at Brent Moore CS, at Connie Hill CS for additional content throughout the week. Well, let's go hit our disclosures and we'll get to the heart of the matter here. The material today is intended for general, informational, and educational purposes only. We'll look at individual symbols today, individual stocks. Those aren't recommendations, of course. Just wanted to try to see what's going on in the market, right? Schwab does not recommend the use of technical analysis as the sole means of investment research. Paper money software application is provided for educational purposes only. All investing involves risks, including loss of principal, and past performance is no guarantee of future results. And all expressions of opinion are subject to change without notice in reaction to shifting market. Market changes, right? So just be aware of that. And I don't think we're going to get into options today. We may look at futures, but we're not going to be talking about futures trading. Okay, so just be aware of that. Now, let's get started here. And let me get that up. There we go. This is the S&P 500. Let's just start with this. We've had a nice bounce right off the 50-day moving average. That's what we got right there. And, you know, so this could go either way. I don't know what's going to happen, but, you know, you could foresee this possibly turning into kind of this head and shoulders thing. Yeah, you know, it wouldn't be exactly equal on the neckline there, but that would be a very bearish move if we did that. But of course, who knows? We'll see how we'll react. Are we going to break above the 20-day moving average this next week? Now, there was market bullishness today. And of course, you never know exactly what the cause of the market bullishness is, but it started the day with Iranian state media reporting that a draft version of the U.S.-Iran Memorandum of Understanding includes the commitment of the U.S. to lift oil sanctions, as well as a commitment from Iran to reopen the Strait of Hormuz. I saw that the Prime Minister of Pakistan, Sharif, I think is the name, said that there's a tentative, you know, not a finalized deal or anything in place. You know, who knows? We've certainly seen this before, and I have no idea. I have no idea any more than anybody else as to what's going to happen with the market. But what we have seen is the market had a pretty good tumble, but a nice bounce. That's driven largely by some of these really big companies out there. Because if you're looking at that sell-off that we had, and we look at the SPX equal weight, look, it's a very different thing. We're at an all-time high on that S&P 500 equal weight index right now, as opposed to the SPX, where we're, you know, not that far from it, but significantly below that all-time high. Now, one thing I want to do today as I go through this session is I'm going to be using the relative strength indicator. So I'm just going to add that to a chart here, relative strength. So before I get too far into this, let me just mention what this is for those of you who aren't familiar with this. This is telling us how whatever we're looking at up here, in this case S&P 500 equal weight, compares in terms of performance, how strongly it's performing in comparison with the S&P 500. Now, if you want, you can change that, okay? You just edit it. You go up to your, you can go up to your studies up there, go there, click on the little gear and edit what that is. But we're going to stick with the S&P 500 for now. But you can see for a while, the S&P 500 was outperforming the equal weight. So this, and let me state it a different way. The equal weight was underperforming the S&P 500 it was going down. When it's going down, it's underperforming the SPX. When it's going up, it's outperforming the SPX. That's what we've seen lately. We've seen a broadening of the performance of the market of a lot of those non-huge companies, the non-mega caps, has been actually outperforming of late. So we can also see that, I think, if we look at the NASDAQ. Here's the NASDAQ. And the NASDAQ was outperforming the S&P 500 significantly, a dip, but now bouncing a little bit the last couple days. So that's the NASDAQ. And let's look at one more. Let's look at small caps. Okay. So here's small caps. Nice trend up in small caps. This is kind of what a lot of traders like to see is it goes up, pulls back a little bit, goes up, pulls back, goes up, pulls back. But we want to see those lows getting higher if you're a bull, that is, I guess. And that's what we've seen. We want to see the previous highs get broken each time. And that's what we've seen as well. Probably not a surprise that we're breaking above this level. You know, sometimes when we talk about support and resistance with people, they'll look at it and they'll be back here and they'll go, well, that was a resistance there. And that's a resistance there. But keep in mind, if you're trending up, the only way you can get a series of higher highs and higher lows, which is the definition of an uptrend, is to break the previous high. So these, it's not a guarantee it's going to break every time, but it's not something that you necessarily need to be super fearful of that we have a high that preceded where we were right now. Now, at this point, we're at an all-time high, or at least earlier today, intraday, on the Russell 2000. Those are small caps. Small caps have performed pretty well, despite the fact that interest rates, they've come down a little bit, but during this time period, interest rates have been, well, let's look at them. Let's look at what interest rates are looking like here. Because we've had a little bit of a pullback, a little bit of a breather in terms of interest rates. This is the 10-year. But all in all, we're up near 4.5% on the 10-year. And if you look at other interest rates, you'd see a similar increase in those rates. So, just keep in mind. But one thing is, interest rates and the future of the Fed can drive the market. Some people are hopeful that the Fed's going to cut interest rates at some point. But I'm not going to take the time to do it, to go to that FedWatch tool, that CME FedWatch tool that we often look at. But right now, it shows that the market participants trading Fed funds futures do not anticipate in 2026 any rate cuts from the Fed. Okay, that's what the market is planning on. I don't know what's going to happen, but that's what the market is betting on, or planning on. Shouldn't use that word, I guess. Well, that's what the market is expecting. All right, so just be aware of that. Why? Because number one, inflation is high. We had 2 inflation reports this week. We had a CPI report this week. And that CPI report, I'm talking year over year, came in at 4.2% headline year over year. Okay. Core, 2.9% year over year. What's the difference? This one includes food and probably the bigger factor, energy. Okay, well, think of oil and whatnot. Probably not a shocker that we've had a pretty significant bump in inflation there. That's that CPI report that came in. It came in largely as expected. It was high, but that is probably for a lot of people and for the Fed unacceptably high. Near target rates like 2%. So that's a concern. With that high, it seems unlikely or less likely that the Fed is going to try and lower rates. because that could be inflationary, right? Here's the other thing. Go back a week from today. We had a jobs report. It was strong. The labor market's holding up pretty strong. Well, one reason that the Fed would cut interest rates is to try and boost employment, boost economic activity. Well, it's already fairly strong. So that's another reason why it's probably less likely we're going to see a cut in interest rates this year. Same thing, yesterday we had the PPI, and the PPI was, at least the headline PPI was a little bit on the hot side of things. So inflation came out a little warm this week. This morning, University of Michigan consumer sentiment actually improved. It improved a little bit, and inflation expectations from consumer expectations, I guess, inflation expectations went down a little bit. So not the most important report probably, but that was another maybe positive thing for the market today. So market's been doing, had a nice little day. Let's look at the VIX and just to try and get a sense of what we're seeing on the VIX. Spike up, if you're like me, you get kind of tired of the situation in, the Gulf with the war and whatnot. And this week was a kind of a tough one. You throw in the inflation we talked about, you get the spike in the VIX there. Well, settling down a little bit with the market going up. That's the kind of normal, the normal trajectory of the VIX. But let me point out something else on the VIX. This is for the market this is for the S&P 500. This is implied volatilities on S&P 500, okay? The index, SPX. But what you can also look at is the VIXEQ, which is the constituent portion. I'm just going to minimize this relative strength because it doesn't matter right now. In other words, if instead of taking the implied volatilities of the SPX, but you take implied volatilities of the individual stocks in the S&P 500, it shows a little different story, doesn't it? Okay? This isn't a VIX that's down below 20. So what it's showing is when you kind of aggregate all these stocks and one stock is going way up and one stock is going way down, they kind of cancel each other out when we look at the VIX. But if you look at them on an individual level, those implied volatilities, that uncertainty is still present for a lot of stocks. And we just see that a lot as we look at a lot of stocks. Now, some of this is driven by oil. Let's look at the oil markets. I already read to you what the news was reporting in terms of potential deal in the Middle East to get oil flowing through the Strait of Hormuz. Not surprising, oil's dropped a little bit, down to 84, which actually in light of the recent, since what, March? That's about as low as it's been since March. That can really only help almost anything other than maybe the energy sector itself there. And so, just keep that in mind. That is kind of driving the market. Now, it doesn't matter whether we look at the CL or BZ. Again, these are futures, but we're not trading futures. We're just looking at the price here. Brent crude, okay? This is kind of the standard, global standard, not the one that we use as much in the US of West Texas Intermediate. This is Brent crude. And you can see declining compared to the S&P 500. Relative strength there. Declining, about 87 roughly on Brent crude. A little higher in Brent than standard, than West Texas Intermediate. That's typical, by the way. That is absolutely typical. Now, let's move on to some other things. All right, here is gold. Gold has absolutely just tanked. Now, to be fair, if we go to a longer term chart, let's go to a 3-year chart. This is where gold is, okay? It's still higher than it was for most of the last 3 years there. And so, just to put it put perspective on that. But it really has dropped significantly. And it could be higher interest rates are hurting gold right now. It could be the dollar, which tends to be inverse, not always. Here's the dollar, DXY, tends to be inverse. You can see the strengthening in the dollar there. Those are all things that can affect gold. But the truth is, right now, gold is in technically just not a strong place right now. Maybe a little bit of bounce, but the trend is lower highs, lower lows, below our 10-day and our 20-day moving average. Silver doesn't look that different right now. I'm not sure. What did I just do? Oh, I just made a mess of that. Let's try that again. Here's the price of silver. Again, not that dissimilar from the price of gold right now there, okay? So, question, is silver reversing? I don't know. I'm not seeing that much reversal right now. Technically, we have 2 days in a row, and you got to kind of take it in context. It's up 6%. Looking at this candle right now, do you see that little itty bitty candle? That doesn't look like 6% to me, but that just shows you how volatile, like precious metals can be. In this case, that's silver. But I think a lot of technical traders would say they need more than this to call it a reversal at this point. Who knows? Maybe this was the bottom, but it can be tough to pick those bottoms, everybody. And so that's where we go. And just a reminder, as we look at all these futures, we're not talking about trading futures, and we're talking about the price of things, just like I'm going to talk the price of crypto coming up. But also a reminder that digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. Due to higher levels of risk, investors should view digital currencies as a purely speculative investment. Okay, that's a mouthful. Here's Bitcoin. Okay. And Bitcoin, similarly, it was a good question on is silver reversing? Well, maybe there's some sign of it, but not, I think, enough to convince a lot of traders there right now that we have a reversal. Is Bitcoin reversing? We're showing some sign of a bounce here, maybe, around that $60,000 level, but that's not a wholehearted reversal at this point, is how I'd say it. We had some lows over here that, it would be nice to be breaking above kind of those, which is kind of pretty close to where we're at. But even more than that, what we'd like to see, if you want to see, ideally, a trend reversal, okay, if you're bullish, you want to see higher highs and higher lows, okay? We don't have that right now on this. So right now it's still lagging, put it that way, okay? And that would be true for any stocks that are, technically this is an equity, but its exposure is so large to crypto that the same warning I read to you, that wasn't from memory, I was actually reading that warning to you, that disclosure on crypto would apply to things like Coinbase there, okay? So, Jim says, what's the difference between my simple chart and my plane chart? Oh, my plane chart, I just removed my moving averages. That's it. I just have a quick link, by the way, up here. So this is just candles, because sometimes I just want to remove a quick link. Let me just go real quickly on how to do that if you guys like to put in links on there. Like if I want to pull up my relative strength, I can pull that up, okay? And by the way, I guess I meant to show you the relative strength of this. Here's Coinbase. There's your relative strength compared to the S&P 500. Here's Bitcoin. Here's your relative strength compared to the S&P 500. Here's gold. Here's your relative. Here's your relative, if I can get it in. Here's your relative strength compared to the S&P 500. So vastly under, I'm not going to go through everything here, but you get the picture on that. Okay. How do you add these on here if you want them? You go up to the gear. You go to where it says My Tools. Mine says On Each Chart. Yours probably, if you don't have it, probably says Off. Okay. I'm going to leave mine On Each Chart. Once you have it on each chart, you'll see a little gear up here. Once you click on that gear, it'll give you the choice to quick link studies or styles or time frames, things like that. Okay? So there you go. If that's helpful. I mean, I find these quick links very helpful. I think it's a nice feature. But the good thing is this, you don't have to do, like maybe you say, I don't care what your 20 and 50-day moving average is. I want something else. Well, add it. It's customizable to what you want. Just a quick, like I have different time frames on here. I have something for just futures charts, which we're not going to talk about. Volume profile, which I use quite often. You're limited, so you can't have everything up there, but the stuff that you're going to use most often. Okay, let's go and let's talk about some sectors. How about? Actually, let's look at a few individual stocks real quick, okay? We're going to go to Adobe, okay? Adobe had earnings. You can see the earnings right there. If you want, you can always link to your live news and you can read. And you can try and, go through the stories and see what happens. But, you can see the reasons why. Or earnings the market didn't like, number one. And downgrades as well. So hence, we're down 6.5% today after it had already dropped pretty significantly. So Adobe is a company that just came out with earnings. Was that last night? I think it was last night. Another one, Lennar. This is a home builder, okay? Home builder, down 4% today. Not as bad as Adobe, I guess, but that's another one that is moving on earnings. Again, you can look and see, the stories there regarding that. Of course, the home building space has been a challenge. Another one that just had earnings, RH, formerly known as Restoration Hardware. They changed their name, I don't know, a couple of years ago or something like that. I'm not even sure why, but they did. And so, but nice trend up, earnings down a little bit on earnings, but hey, look, even with the move on earnings, that's a nice trend that we still have on that. And when I say nice, I mean, looking back, it's not a guarantee of anything in the future here. If you want to see other companies that are moving today, one thing you can do is you can go to the watch list, go to, say, lovers and losers is one way to do it, or you can go to public percentage change gainers. We'll look for gainers. We'll be optimistic here. And not surprisingly, SpaceX is at the top of the list. I also have, if you don't want to look at everything, like some of these are probably pretty small stocks, right? I don't really care as much of those right now. But I have a market cap column in there that you can sort by and you can look. Yeah, SpaceX, where they talked about ARM Holdings. Nice bounce here on ARM Holdings. That's a nice big flag pattern. And, how do traders come up with target prices on this? Well, sometimes what they'll do is they'll go, this is a big flag. Here's your flag pull, okay? Or there's your flag, excuse me. This was the flag pull. And they'll look and they'll say, well, the length of that flagpole, that's that one, that segment right there, okay, is how far we're going to expect it to go up. Now, some traders, if they're more, I don't know, aggressive, they'll actually measure it from the breakout point right there. Or you can, what I normally do is I go from the low on that and do that. That doesn't mean it's going to achieve that target. It doesn't mean when it's going to achieve that target, even if it does. But that's a fairly bullish, obviously fairly bullish chart here. Okay. So we got some others that you'll see. By the way, another way of kind of looking at this, if you want, go to the Market Watch tab. Go to Visualize. Here's the S&P 500. And you can see, we got, I mean, IT is a little bit mixed here today. It's not the bright red that we've seen the last few days. I mean, the way this works is the brighter the red, like this is down. I don't know what happened with KLAC today, but and Adobe we just looked at. The brighter red means the bigger move. This kind of dullish red is down 0.02%. Apple down 1.64%. If you were looking at this, well, yesterday it was like all bright green, but you know, a few days ago it was all bright red. So a little mixed, more green than red, no doubt on this. 378 advancers today, 120 decliners today on the S&P 500. But what I want to do is I want to look at, let's look at technology here, because that's, you know, it's a big company, a big sector that drives everything. Oh, it's that split. That's what it was. Thank you, Zach, for reminding me on that. So a little bit of a miss. This actually isn't down 89%, right? Because the stock price is split. So if you had 100 shares, you'd have, it's a tenth the price, but you'd have 1,000 shares now. So, but this is probably not a bad way to see communications equipment, fairly strong right here. Technology mostly strong today, although Apple not so strong. Software, yet not that great today. AppLovin looks okay, but all in all, the software space not so much. Semiconductors, a little mixed. A couple standouts: Intel, AMD on that. Okay, so we talk about IT as this kind of homogenous type thing, but it's not, right? It's very mixed, and parts of it can be doing very well and other parts can be doing very poorly. You can do this, by the way, with other sectors as you want: energy, discretionary and whatnot. Look, just one other thing on this. Amazon, you can tell how big, like this is consumer discretionary. This whole thing represents the whole pie. We'll call it a square pie, okay? What percentage, how big a piece of the pie is Amazon when we talk about discretionary? Yeah, huge, right? And then you throw in Tesla, and those two together are over half of consumer discretionary there on that. So I think it's a helpful way of looking at that. Now, what I want to do though is I want to look at sectors. Okay, I want to look at sectors, and I also want to look at the relative strength of those sectors. And we'll look at today's performance. Top performing sector today, materials, right there. You can see materials has been underperforming for quite a while. Not the last week or so, last few days, this is actually turned up. It was outperforming. This is kind of the nice thing about the relative strength. As you can see, hey, first couple months of the year, it was doing great. Lately, not so much. And very lately, maybe it's turning the corner here a little bit. but that's the top performing sector here. For materials, it seems to me about around that level. Those are some levels that we went up to before and got rejected from. Went up, got rejected, went up, got rejected. Didn't quite get there before we got rejected. So this would be, seems like, in my mind, from a material standpoint, that'd be kind of a key level to consider on this. So bullish, bearish, right now, not, it's more channelish right now. Probably support there, resistance up there, looking for a break of one of those two, one way or the other there on this. Here's financials. Financials has been showing some strength. Is this a level? Well, it looks like we may be breaking above this level right now. A lot of times when we break above a level like this, and you can see again, kind of like materials, was struggling the last week or two, seems to have turned the corner. When we do break a potential, say, resistance level on this, then that is a level that a lot of times you want more than one day peaking above it as kind of a confirmation, especially if the stock goes up and comes down and then bounces off it is what a lot of people look for when they're doing that. And let's look, here's utilities. How's utilities doing? Again, the trend is going down. Similar a little bit, but unlike financials, remember what I said earlier about lower highs, lower lows? We've had a series of lower highs and lower lows. Utilities is getting hurt on this. The high interest rates don't help utilities, by the way. They tend to hurt utilities. Utilities tend to be very leveraged. Also, as interest rates are higher and say treasury rates are higher, one reason that people often go to utilities is they pay a higher yield. Well, if you're going to get a pretty high yield in something that is considered to be a lower risk investment, such as a treasury, then it's tougher competition for utilities. So they tend to often underperform. Energy. Obviously, we had that big run up in energy. You know, that run up in energy started before anything in the Gulf started. But obviously that helped spike it out. But since then, I guess I'd kind of look at it like this right now. Which way we're going to break out of in terms of energy? Well, it could be news driven. We'll see what comes out with that. But yeah, it's been underperforming a little bit, not surprising just because it spiked up so much. But I think this is kind of the relevant technical drawing there on our energy sector. Real estate. We were kind of banging our head right here. Breaking above it. Potential strong move. You can see that relative strength shift significantly on that as compared to that. Now, pretty much what we've been looking at lately on most of these, we've seen that relative strength go up compared to the S&P 500. How can they all be going up compared to the S&P 500? Well, I'll go back here to staples in a minute, but when you look at something like IT, which is so big that it kind of dominates in a certain way the S&P 500, when that goes down, it pulls the whole average down. So that's the reason why a lot of these can be outperforming. More than half of them can be outperforming in terms of relative strength of late the S&P 500 versus what you consider the average to be, because the average is dominated by, say, IT. Staples, not a super bullish chart, except lately we've had some momentum there. Industrials, again, sideways, probably kind of key level up in this range. Again, going mostly sideways. Communications, that's a downward trend. And unlike the others, it's waned the last few days. IT, we already looked at. Healthcare, showing some strength, and discretionary, not underperforming right now on discretionary in terms of our sectors. In fact, it's been underperformed for quite a while. You can see that with the relative strength there on this. Another way to look at these, if you don't want to use relative strength, is you can say, hey, here's our 1 week, here's our 1 month return. What has been the last 1 month's return on these? Healthcare and financials have been the standouts over the last month. Communications and discretionary have been the laggards over the past month there. Now, let me just see if there's anything else that I want to, yeah, that's discretionary. I'll just make sure that was at Staples. We're just about out of time, folks. And I want to, let's just finish up perhaps with some upgrades, downgrades for the day. AMD upgraded, up 5% today. So nice little bounce, strength on this. In fact, we did a sample trade, an example trade in the last webcast I just did, which was our advanced options webcast, which will be in the recording if you're interested in seeing the sample trade. We're not going to talk about options more than that today, though. So in this webcast. So that was an upgrade on AMD. And let's see, other upgrades that were of note, not other big names. Downgrades, biggest downgrade, Adobe, which we looked at already, earnings. Travelers got a downgrade as well, but seemed to shrug it off there. Everybody, thank you, by the way, for joining me today, for letting me sit in the chair for Mike here. Hope he has a good day off. Hope you have a wonderful weekend. I appreciate you joining me. Make sure you subscribe to the Trader Talks channel so you don't miss future webcasts. Connie, thank you very much. And before you go, if you'd just do me a quick favor, if you'd click on the thumbs up if you liked it, the like button if you like it, that does me a favor. But if you didn't like it, then don't do that, I guess. And also subscribe to the Trader Talks channel. Everybody, I appreciate you. Have a wonderful weekend. And we'll see you all same time next week. Bye-bye, everybody.